Morning, Steve here in Chicago with the Morning Grain Conference. Well, it's Friday. Hope everybody has a great weekend and a great holiday. On the East Coast, it might be a little challenging for travel, but all in all, it should be a good weekend and hopefully a good Christmas for everybody. As far as the markets are concerned, overnight, you've got wheat and beans down, corn a little bit higher. Most markets are lower. I think the market's concerned about a shutdown of the U.S. government. And they're also concerned about some of the issues in Washington right now that's kind of keeping things a little nervous, especially in the financial markets. We've got also gold, silver, coffee, copper, cocoa, sugar, cotton, all lower. So it's one of those days in which all commodities are lower because of some of the uncertainty, especially in Washington. For the week of December 13, wheat sales were running 12% behind a year ago, shipments 13% behind, and the USDA is forecasting 11% decline. There was a comment out of Russia that the Ag Ministry said that Russia's January through June grain exports will be 14 million tons and there will be no export curbs planned. So that's a little negative to the wheat market. They were hoping for some kind of slower exports that might help U.S. exports. Corn sales are running 17% ahead of a year ago, shipments 76% ahead, and our USDA is forecasting a 1% increase, so that's a positive to the corn market. Soybean sales are running 30% behind, shipments 40% behind, and the USDA is forecasting 11% decline. So there's a little room there despite the fact that China is buying for the U.S. maybe to bring exports down and raise the carryout. The COFCO and also Sinograin said that they have had 2 batches of buying of U.S. soybeans. That's amid a truce of the trade war, and the state-owned ag conglomerate made purchases based on domestic demand and to fulfill consensus reached by leaders of China and the U.S. during the G20 meeting. Cattle on feed was 102%, 101.8 was expected. Quarterly hog pig numbers were 102 and 102.7 was expected. Brazil weather looks good, and I think that's offering some resistance to the beans. Argentina weather is also improving, which also could offer some resistance to the beans. Argentina said that their wheat crop is mostly in a good, normal to excellent condition with 68% of the harvest complete. That's kind of contrary to what some people had thought because of the excessive rains. That also might be offering some resistance to the wheat. Yesterday, funds were sellers of beans, oil, and a lot of corn. Bought a little bit of wheat. Continue to be short 25,000 beans, long 70 corn, short about 18 to 20 wheat. So we'll see if the market can hold at these kind of critical levels in the grains or if we sink lower. Historically, from a trend standpoint, we tend to trade lower in January, make Feb lows, and then try to work higher into May or June, depending upon what the U.S. weather pattern looks like. So we'll see if that pattern continues in 2019. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.